Hello viewers, welcome back to my channel SK Solutions. My name is Deepthi Madhuri and I am a Tally trainer. In previous video we discussed about debit note voucher and credit note voucher and how to record the transactions by using voucher mode under debit note and credit note voucher with an example. Today in this video we are going to learn about depreciation and how to record the transactions relating to depreciation with an example in Tally. First of all, as we know that depreciation is nothing but decrease in value of tangible assets over its useful life. It means decrease in value of asset due to wear and tear, obsolescence and some other factors. So let us learn how to enter the depreciable transactions in Tally Prime with an example. Here it is the example. Enter into Tally Prime. I had already created the list of ledger accounts. Let me show you. Go to Alter, Ledger and here. Computer comes under fixed assets. Depreciation comes under indirect expenses as it is a profit and loss item. Okay. And donations received indirect income. Furniture fixed asset. Lakshmi is nothing but capital. Power bill paid indirect expenses. And finally vehicle fixed assets. Now let us enter each transactions in voucher. First transaction is Lakshmi invested capital on business. It is nothing but receipt to business. So go to receipt voucher F6, credit Lakshmi account 4 lakhs and debit cash account as cash is coming in. Next, computer purchase at 23,000. Yes, here you purchase a computer and make a payment cash. So it comes under payment voucher. Debit computer account as computer is coming in 23,000 and credit cash account as cash is going out. Then press Ctrl A. Next vehicle purchased, debit vehicle account and credit cash account. Next depreciation on vehicle. Here we are providing the depreciation on vehicle. Yes, we provide depreciation on fixed assets only whenever we purchase the fixed assets. From the date of the purchase of fixed assets, from that date we need to provide depreciation on the assets which we had purchased. Okay. And this depreciation transaction that comes under journal voucher S7. Here you need to debit depreciation account as depreciation is nothing but expenses 6,500 and credit vehicle account. Credit the account on which you are providing the depreciation. Here in this transaction you are providing the depreciation on vehicle. So credit vehicle account. Then press Ctrl A to save it. Next furniture purchased. It is nothing but payment. Payment debit furniture account 13,500 and credit cash account. Next power bill paid. It is also a payment, right? Debit power bill paid and credit cash account. Next, depreciation on computer. Yes, here also we are providing the depreciation on computer which we had purchased earlier. One more thing is every month the depreciation has been calculated at the end of every month. Yes, we need to provide depreciation on fixed assets which we had purchased at the end of the month. Okay. And depreciation on computer, it also comes under journal voucher. Depreciation account debit 2,500 and credit computer account as you are providing depreciation on computer. Next, donations received. It is receipt to us. Go to receipt to voucher. Credit donations received 15,000 and debit cash account as cash is coming in. Next, computer sold. Yes, here you are selling the computer at 30% profit. It is receipt to us. Go to receipt voucher and press Ctrl plus N to access the calculator. See in below. First of all, the amount which you had purchased the computer is 23,000. The original value of the computer that you had purchased is 23,000. In that, you need to subtract the depreciation which you had provided on computer. 2,500. Yes, you provided the depreciation on computer as 2,500. 23,000 minus depreciable amount 2,500. Now 20,500 is the original value of the computer. Because depreciation is nothing but decrease in value of asset. After reducing the depreciation, the original value of the asset is comes to 20,500. Right? And we are selling the computer at 30% profit. We need to calculate this 30% profit on original value of the amount. Nothing but 20,500. Okay? 20,500 into 30%. And the profit that we are selling is 6,150. Add this profit to the 20,500 because we are selling at profit, right? You need to add this amount to the original value of amount. Nothing but 20,500. 20,500 plus 6,150. Then you get the total amount which you are selling the computer for. So, credit computer account, how much? 26,650, and debit cash account as cash is coming in. Okay? Then press Ctrl A to save the transaction. Yes, you are selling it for profit, right? And there is profit. You need to enter that profit in journal voucher. Because if you are not enter the profit separately in journal voucher, in balance sheet, it shows negative balance. See, detail. See, here computer showing negative balance 6,150. To rectify this, you need to enter another transaction relating to the transaction. Go to F7 journal. You need to create one more account, profit on sale. Because you are earning profit while selling the computer, right? That's why you need to create another ledger account, profit on sale, that comes under indirect incomes. Then press Ctrl A. You need to credit this profit on sale and debit computer account. How much? Current balance in computer account is 6,150. Nothing but profit. And you need to credit profit on sale account. Because this profit, as per the nominal account rule, debit all expenses and losses, credit all incomes and profit. So that's why we need to credit the profit on sale account. Then press Ctrl A to save it. See, now in balance sheet F12, give detail. See, now there is no balance in computer. It means you sold the entire computer and there is no balance, no negative balance that has been there in computer. Like this, you need to enter the sales transaction after giving depreciation. And next transaction is depreciation of furniture. Yes, it comes under general voucher only. Depreciation account debit, how much? 1,000 rupees, and credit furniture account. Here see, the original value of furniture that we had purchased is 13,500. After providing 1,000 rupees as depreciation on furniture, see the amount, the value of the furniture has comes to 12,500. Means it reduced to 1,000 rupees. It is nothing but decrease in value of asset. Okay? Then press Ctrl A. Next, sold furniture for 10% loss. Yes, in earlier transaction we sold the computer for 30% profit. But now we are selling the furniture at loss, 10% loss. But it is a receipt to us, right? Go to receipt to voucher. In that, first of all, calculate it. Go to calculator, and the original value of the furniture that we had purchased is 13,500. In that, you need to subtract the depreciation amount, 1,000 rupees. Yeah, 13,500 minus 1,000 rupees. Then now 12,500 is the original value of the furniture after providing the depreciation. In that, calculate 10% on 12,500. 12,500 into 10%. And the loss is 1,250. You need to subtract this 1,250 from 12,500 because you are selling the furniture for loss, right? That's why you need to subtract this from 12,500. Now the amount that you are selling the furniture is 11,250. Credit furniture account as furniture is going out 11,250, and debit cash account as cash is coming in, right? Then press control A. For this transaction, we need to give another transaction also. It's nothing but you sold this furniture for loss, right? You need to enter another transaction also. Go to F7 journal and create ledger nothing but loss on sale. It comes under indirect expenses. Loss is nothing but expenses, right? That we are selling for loss. Then press control A. Yes, loss on sale shall be debited in general voucher. As per nominal rule, debit all expenses and losses. How much? 1,250 and credit furniture account. Because earlier you sold the furniture for loss 1,250, right? So now give the transaction like this. Loss on sale account debit to furniture account. To nil the balance in furniture account. Okay. Then press Ctrl A to save it. Yes. This is how you need to enter the transactions, and this is how you need to calculate the depreciation while selling the fixed assets. Okay. Now go to profit and loss account F12 and give it detail. Here in indirect expenses in debit side of profit and loss account, depreciation, loss on sale. Yes, loss on sale comes debit side of profit and loss account and power bill paid. And in credit side, indirect income, nothing but donations received and profit on sale. Profit on sale is nothing but income to us, right? That's why it's showing on credit side of in profit and loss account. Next, go to balance sheet. F12 and give detail here. Capital, profit and loss. The balance of net profit has been transferred to liability side of balance sheet. And computer, furniture. Yes, we sold these two fixed asset, computer and furniture. And vehicle. Yes, the profit of computer was reflects on credit side of profit and loss account. I had already showed to you. And the loss on furniture shall reflect on debit side of profit and loss account. And cash in hand. Here, see. Yes, loss on sale on furniture and profit on sale that related to computer. Okay, that's it. This is how you need to record the transactions relating to depreciation. Thanks for watching. If you want to receive more updates on Tally Prime, accounting and related topics, be sure to subscribe to my channel and click the notification bell to receive latest updates.